Well, welcome everyone. Thomas Montgomery, ICS. It is Thursday, April 2nd, 2020, and there's no place I'd rather be than right here, right now with you, talking about a very important topic matter. Now, as you know, we have these training sessions Monday through Friday, typically at 8 o'clock Central, but we have different days for different roles. So our business financial literacy advisors are trained on and supported on Mondays and Wednesdays. Branch managers Tuesdays and Thursdays, which would be today, and then our rank and file affiliates on Fridays. Anyone's welcome to sit in, and in fact, we share the recordings with everyone because we're very transparent. But keep in mind, you'll want to understand that if you aren't clear on what your role is, you're going to become confused and probably ineffective. So today we're going to talk about branch managers, right? And you know if you're a branch manager. If you're not a branch manager, you're welcome to listen in, but be careful to not assimilate the information and assume that it applies to you, because if you're wearing a different hat, if you're in a different role, then you're paid differently. Okay, so what we're going to do is go through the economic modeling as a branch manager. Historically, we've done trainings. It used to be Saturdays, and we started doing them on Fridays here in our office. But of course, with all that's going on in our world and economy, we're not allowed to have visitors in for training. And so we have been rather subtly maybe breaking down those lessons and addressing them on these daily or almost daily Zooms, and then getting them out to you. And so I believe this is the last lesson that we needed to capture. And then what we'll do is we'll package it up and get it out to everyone, so you have kind of a turnkey virtual training. And if you want to sit and go through all of them in one day, which is a little much for most of us, you can do it, or you can make sure that you've listened to all of them at your own pace and your own convenience. So again, today the focus is on economic modeling. When we decided to become a branch manager, we might have had different reasons, a different why. Why is it that we want to be a branch manager? Is it that we want to be a visible and active resource in our local community to help small businesses? Is it that we wanted to have that brick and mortar office so small businesses knew where to go, just like State Farm does for insurance, Edward Jones does for investing? You wanted to be that local leader. But probably part of your decision making to become a branch manager is you wanted to benefit from the economic rewards. And so let's make sure that we understand the economics, and we can do some what if scenarios, and we'll even do a little bit of role playing and scripting. So let's go ahead and get started. So this is a bit of a busy sheet, but we're going to break it down into pieces. So the first thing that we all need to know is that branch managers focus on the Capital Ready program. And the Capital Ready program has 3 triggers. In other words, there's 3 different times that a client pays in. And of course, you share in all of those, but we'll come back to your benefits in a minute. Right now, we're talking about 3 income triggers. So when clients enroll, they pay you $499. That's a non-refundable processing fee. Again, they pay you $499. Now, that process is described right down here. We've covered this many times on other trainings, but it's obviously right here, and then I'll send out a recording so you'll have this. But you collect the $499. Secondly, the client is going to pay a deferred refundable deposit of $2,500. We do not collect that. We do not bill them for that until after their first cash capital raise. So they don't need to have that up front. Third, they're going to pay a performance fee of 9.5% based upon the capital raise that we help them with. And so, again, that's not billed in advance, that's billed after each capital raise. It can become a little bit more complicated if they're also going through Fast Track or TCR, but let's just keep it simple for now. So these are the 3 economic triggers that a client pays in off the Capital Ready. Now, correspondingly, And to no surprise, there are 3 triggers for payout to you as a branch manager. So again, you're collecting the $4.99 when they enroll, and that's addressed right here on step number 1. Secondly, we're going to pay you $750 of the $2,500 once they pay that. And third, as a branch manager, you receive 5% of the 9.5 once they've paid. So you're collecting the $4.99, we're collecting the other 2. So when you collect, you owe us our portion, which is referenced right here on number 4. And for these 2, we owe you your portion, and we pay out every Friday for prior week collection. And so technically we pay out on Thursdays, like today, via ACH, and you receive it on Friday. Okay, so now we've covered on the Capital Ready program, which is really the singular focus of branch managers, enrolling people in the Capital Ready program. As a branch manager, I wouldn't be out pitching the fast track. I wouldn't be out pitching the TCR. Those are available resources under the Capital Ready program for branch managers. Have a singular focus, singular focus. We have different roles that focus on different things, but today's trainings for branch managers, your focus should be singularly on enrolling people in the Capital Ready program. Now here at the bottom, we got a couple assumptions, and we're going to play with those as we go through and see how they change the numbers. So don't worry about those right now. And again, here at the bottom, we've already covered this. This is how you pay us, because you're collecting the $4.99, you owe us half of that. And again, as we've said before, and I'll mention right here, now let's say that you feel like, well, in today's economic environment, people are hurting, and I don't want to charge someone $4.99 to enroll in the Capital Ready program. I want to give them a discount. Great, you name the discount. So if you want to give them a $50 discount, a $100 discount, $150 discount, a $200 discount, all the way up to a $250 discount, that is your prerogative. You're in your local community. You know what the needs are. You can make those exceptions as needed. You don't need our permission. So obviously that is going to reduce your front end income. So you want to be cognizant of that. But if you want to discount that up front, from $4.99 all the way down to $2.50, that's within your power as a branch manager. Okay, so now with that being said, let's get over to income projections. Well, we know that you're going to, well, unless you give discounts, but let's assume you're not giving discounts. So you're going to bring in $4.99 for each client that enrolls. You're going to make $750 out of the refundable deposit, which we covered over here. And the client's agreeing to work with us. We're promising to help them with at least $100,000 capital raise. And the client is promising to work with us for at least $100,000 capital raise. And so the performance fee that, I guess that's, I think that number's off, isn't it there? E7 times, yeah, we got to change that. That should be, that should be 5% of that, shouldn't it? So my apologies, my number was off there. Okay, so these assumptions here, we're going to play with some, so don't worry about that. So we're going to do some what if scenarios, and this is the higher end range. We'll obviously look at some more moderate numbers. But as we change the what ifs, then our projection sheet here is going to change. So the client enrollment income is going to be a function of the $4.99 times the quantity. And so it's green here because that's the upfront money. The other doesn't come instantly. Depending upon the capital readiness baseline of each client you enroll will help determine how quickly the clients get funded. If they are 680 or above with 3 or less inquiries, we're probably going to recommend to hop right into the fast track. And that is funding really effectively. We just had one of Phil's clients just got $85,000 yesterday in their first day of funding. So we know that the upfront income is the most important because it's in your pocket immediately up front. The others are going to have some lag, and the amount of lag is based upon the capital raise. We are current processing all new clients, still working through a little bit of cleanup some of the older clients, but we're all over it. So if you were to enroll, the assumption here is 100 clients in a month. And you might say, oh, I can do a lot more than that, or you might say, I could never do that much. Don't worry, we're going to do different scenarios, but let's just start with that. Now, the 100 is not an unreasonable number, and the reason for that is, remember, the three of us that co-founded ICS all came from the SBA. All three of us work for small business development centers. And so we were full-time working under government salaries, which we made in a year what you guys should be making in a month. But the bottom line is that's the type of volume that they're doing each month. And you have a whole lot more economic incentive. So if you can't at least match what a government bureaucrat's doing, you're probably not very good at your task, and we need to work on improving your skill set. But with that, with the assumption of 100, then we would bring in $49,900 of upfront income. We would bring in $75,000, which is $750 times 100 in the refundable deposit income. Of course, it's not green, so it's not immediate. So we have to assume probably this is going to occur in the subsequent month in most cases. And then the performance fee, which is 5% of the $100,000 capital raise. So E8 times E4. So that's correct. So your projected monthly gross income for your branch is, it's not get rich quick, but it's not a bad month, a little over $600,000. We'll go through and look at some of the projected expenses, and then we'll look at some more conservative numbers, so don't worry. So what would your expenses be for your branch? Well, you manage the P&L, so it's really up to you. But we know that of each $499, we're splitting that 50-50. Can't complain about that. That's fair. You're keeping half and we're keeping half. So then half of this is approximately $25,000, just rounding the number. You're going to pick what your monthly salary is. It's up to you. If you want to get paid little, pay yourself $5,000, $6,000, $7,000 a month. If you want to be paid more than $20,000, that's up to you. But $20,000 a month is a reasonable salary for a branch manager. Put you right about $250,000. Doesn't keep you from having profit distributions or extra income, but that's a normal adult income. You're going to pick the office and how much you pay for rent, but on average, it's typically around $2,000 a month. You're going to want to have an administrative assistant, probably going to pay around $45,000 to $50,000 a year. Here we're assuming $4,000 a month. You're probably going to want to have a rep that's out developing business, interfacing with key influencers, and we'll talk about how we're going to build the funnel to drive these numbers here in a few minutes. But let's just assume you're paying them $60,000 a year, $5,000 a month. I'd recommend getting a company car, fully tax deductible. You can wrap it if you want, but the bottom line is you want to be cruising around in a nice vehicle to set a positive image and enjoy those benefits, because if you don't pay on a company car, you're going to pay more taxes, so it's a write-off. For you and your staff, I'm assuming that you'll want to have health, dental, life, and some sort of retirement program. So again, you can change these numbers to meet what your budget is. Travel and entertainment, not a whole lot of travel going on right now, but in general, I'm assuming you'll want to attend conferences and trainings, and so you'll want to have a budget for that. And then the other is just frankly anything else you want to put in. So if you said, well, the other needs to be a lot more, right? It needs to be $6,000 a month. Well, great, you put that in. So here we have a projection off of a pretty aggressive number, an attainable number, but an aggressive number. So let's change that. Let's say that all we could do is we could muster up only 20 clients a month. We're not very good at what we do yet. We're still climbing the learning curve, but we're helping one client a day, a business day, 20 clients a month. So we leave everything else as it is, but we've just reduced volume. Let's see how our income would fare out then. Well, our front end income is obviously decreased quite a bit, decreased by 80%. Everything else is linear. So now our projected gross income is about 125,000, and we position these all as fixed expenses. So they stayed the same regardless if you sold 100 or 20 capital ready packages, but you still have a lot of profit left over after your expenses. Let's say that you're really kind of bad at what you do. You're just not very good, and all you can muster up is 10 clients a month. That's all you can do. For some reason, you're not able to connect with churches or chambers or any key influencers. The new businesses that are starting, which you have access to, the new LLCs, C Corps, S Corps, DBAs, you're not comfortable talking to any of them. All these small businesses that are struggling right now, you're just not very effective. So you're a low producer, but you're still bringing on 10 clients a month. Well, that's going to have monthly gross income of 62,000. We still covered our fixed expenses. Now there's a timing issue, right? Because again, the green means up front. There's a little bit of a lag. That's why working capital is important. And so the fixed expenses stayed the same, but we still have a profit. Let's say that you're just miserable. I mean, you made a mistake becoming a branch manager. We should have gotten someone else. All you can muster is 6 clients a month. Well, now we're in trouble. If all we can bring on is 6 clients a month, we're not covering our fixed expenses. So we're going to have to trim some expenses here. Well, at 6 clients a month, I would say let's get rid of the business development rep, because they're sure not developing much business. Bam, got rid of them. So that cut out part of it. We're going to have to cut out some other elective expenses. We're going to have to tighten the budget up a little bit. All right. Well, by firing one person and reducing discretionary expenses at 6 clients a month as a branch manager, we're still able to make our $20,000 a month, which again, it's not get rich quick. You've probably been making more than that. And this is a slap in the face to only make $240,000 a year. But for a lot of people, especially in today's economy, making almost $250,000 a year is still an adult income. You still created one job, just got your office, and we're still having a little bit left over. Now, so those are the scenarios that we can play with. And so we might say, well, let's go back up to the more reasonable 20 a month, but we realize that probably in the first month, each client's not going to get their full $100,000 capital raise. And that's a true statement. Let's say that the average client's going to get $30,000 a month in their $30,000 in their first month, or we can even be more conservative and make that 20,000. So I think my formula is off here. I'm going to have to correct that. E8 times E4. No, that's right. That's right. Okay, so even if we're only raising 20,000 in the first month, you can still see that there's great profit to have. And again, you can go in and play with the different scenarios. So that's an economic model. So you need to have a projection each month of how many conversions you're going to have, right? Because it's your responsibility to implement. It's our responsibility to provide you the tools and training and support, but you have to implement in your community. So how would we go about, let's just work off of 20 for now. How are we going to go about finding 20 people to help? Well, we've talked about it some already, kind of indirectly. Key influencers are key. You might be able to talk to churches, and I know chambers are right now looking for resources for their small businesses. There's a chamber in our community. They have an emergency fund that they set up to help small businesses. Do you know how much they're offering to help a small business? $300. Now that's gracious. I'm not being disrespectful, but $300 is not going to get a small business very far. That's a one-time $300 payment. We can get clients a lot more than that within a month in most cases. So the need is out there. If as a branch manager, you're not able to translate the problem, which is that small businesses need capital, and the solution, the Capital Ready program, and find and enroll clients, then there's a disconnect, right? You may not be in the right role, but many of you do. And we've got a brand new branch manager. His name is Barry. Real name's Kenneth, but he goes by Barry. And he's just a machine. We had a call scheduled yesterday, and he's brand new, and he couldn't have the call with me. He was so busy answering phone calls from small businesses that are contacting him about the Capital Ready program. So, I mean, it can be done. Some of our branch managers are doing really well, and others are not so much. And so what we want to do is help those of you that are not performing. If you're not making adult income, if you're not helping at least 20 clients a month, we need to do one of two things probably, right? We need to either do some additional training and support, which would be our pleasure to do, or we need to get you in the right role if this is just not the right role for you. Now, in terms of scripting, so let's address two scripts, one of which would be to approach key influencers. The other would be to approach what you would say to the client or prospective client themselves. Let's work through that. So let's take a look at, we've got almost a full group here on our branch manager call. Frank's on. Frank is one of our top producers. And so let's pretend Frank is a pastor of a local church. And so I approach Frank, and this is what I would say. Hey, Frank, how are you doing today? I hope you and your family are safe and healthy. And he's going to say something, and I'll listen to him and maintain good eye contact. And then once he's finished, I'd say, well, Frank, I want to let you know that I'm a branch manager of a national organization. We're administering a grant subsidized program to help small businesses access capital that can be used to start or to grow a small business. There's no minimum credit score requirements, no minimum time in business. And in fact, through this grant, we actually guarantee at least $100,000 capital raise for every participant. I was curious if we might be able to collaborate, Frank, and be able to help those small businesses that are within your sphere of influence access some of this capital. Then you wait for his response. Now, you could set Frank up as your Frank as an affinity partner or as a rep or how have you. And of course, we can build in commissions into the economic model if you want a revenue share with Frank, that would be your choice, or the key influencer. But it's really that simple. And they know that right now, I mean, just try to call a bank. It used to be that we would, in this training, we'd say, well, it's kind of hard to get a loan from a bank, right? Because you have to meet the 3 C's: cash flow, collateral, and credit worthiness. You have to have all 3 typically to get a loan from a bank. Most small businesses don't have all 3. Right now, that's not even the topic to discuss. Most banks are incredibly difficult to work with, to be able to reach. They have limited staffing, and it's a mess right now. So when we can turn around and help small businesses access capital quickly with much looser underwriting criteria, it's a blessing. So that's kind of scenario 1 or scripting 1 if you wanted to approach a key influencer. And of course, you could approach others in terms of banks. And if you can even reach the banker, you could ask, hey, I was curious, in today's economic environment, are you finding that there's some small businesses that's approaching you that you're not able to help at all or help fully with their capital raise needs? I run a local branch. We have a grant subsidized program that assists small businesses in accessing at least $100,000. No minimum credit score required, no minimum time in business. Do you think that there might be some opportunity for us to help some of the small businesses that you're not able to? And they may be receptive, they may not be. Okay, so there is that. And then the third scripting that we wanted to cover is if you're actually talking to the small business, what do you say to them? So let me stop the share for a second. And as a branch manager, you of course get a replicated website, don't you? And on that replicated website, It's going to have your contact information on it, but let me share over here. Okay. And so it'll have your contact information, of course, instead of ours. But what you're going to do is you're going to direct them over to the Capital Ready package page, because that's our focus, right? Helping small businesses with the Capital Ready program. There's a YouTube video embedded here that describes the 10-step process. And then ultimately, if they would like to move forward, you're going to help them fill this out, and you're going to collect the $4.99 for them, right? You're going to collect it. That was part of the revenue stream that we just talked about. That's what you're going to do. Now, some of our branches are having us take this form off here and instead put their payment link in, like we just did this for Phil and Jim this week. So their website doesn't have this form, and instead it has a payment link, and people just click on it and go ahead and pay the $4.99 directly to them. But that's what you need to do. And so you need to understand what the Capital Ready program does and how it works. And frankly, if you just get familiar with the content on this page and understand the content of this YouTube, as well as the other trainings that we do, you are in good shape. All right, so let's stop that share. And then there's one more share I want to do here, and it's kind of on track and a little bit off topic, but we'll just go through it while we're here. So we recently did a training on comp plan. And so we did the training, we sent it out, both the recording and the PDF, and I'll send it out again. Some of you seem to have not assimilated it, which is of course my fault, not your fault. So on understanding the comp plan, we go through different scenarios. So let's say it's a Capital Ready client. Well, as a branch manager, here's how you get paid, and that's consistent with the model that we just showed. Other roles get paid differently. Let's go to step 2. If you bring someone as a standalone fast track as a branch manager, it's not applicable, right? Because it's not what you do. You focus on bringing on clients into the Capital Ready program. Scenario 3, standalone TCR program. How are you paid? It's not applicable because that's not what you do as a branch manager. As a branch manager, you focus on the Capital Ready program. Step 4. Now this is more likely to occur. You bring them on the Capital Ready program, and then we use fast track. I'm going to go through this with all 4 comp payouts because I know Scott had some questions on this. And so if the client's enrolled in Capital Ready and we take them through fast track, if you're a joint venture partner, there you go. If you're a branch manager, this is not applicable because you're going to be paid out under the Capital Ready portion. Same for BFLA and same for small business affiliate. So Scott, here's the answer to your question. When you have a client that you enrolled in the Capital Ready program, and if their first round of capital is from the fast track, you're not paid from the fast track income. You say, oh, I'm not getting paid for that client. No, 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 no. We're going to then turn around and bill the client under the Capital Ready program after they've paid the fast track performance fee. And then here, Scott, is the answer to your question. So we've talked about this before, and it's important to understand if the client's in Capital Ready and then they also do the fast track or they also do the TCR, then there's an overlay fee. They're going to have 2 sets of performance fees, aren't they? They're going to have one performance fee for the Capital Ready program, which is kind of an umbrella, addresses all sources of capital raised. And then secondly, there's a separate performance fee for the fast track and or for the Capital Ready. So hopefully that makes sense. All right, so let's now go back to the economic model, share that again, which is our primary focus today. Okay, now let's talk about a couple variances, and I'll address Tubby's question concurrently. So let's say, in this case, Tubby has this instance specifically, so it's a real life example. You have a client and they want to use the 100% real estate financing program. And in this case, to buy a house for $335,000. So what has to happen? Well, first you have to enroll them in the Capital Ready program. And so that has the payouts as we've talked about. Now, in this case, let's take it all the way down to one client. And this client, we're going to raise $335,000 for, because it's a real estate transaction. This performance fee is not updating correctly, is it? So it's going to be equals this times this times that. There we go. Now the formula is correct. So on a one client basis, Tubby, the income you're going to earn, you're going to bring in the $499 when the client enrolls. You're going to make $750 the refundable deposit when they pay that, and you're going to make $16,750 off of that real estate transaction. So that one deal for the whole month is not enough to pay all of your overhead, but you can see the revenue from just one client. You've made almost $18,000 from just one client transaction. Now, Tubby's question, frankly, was just a little bit different. So you have to understand when we're doing it, and I'll put it right over here, on real estate transactions, spell it as I talk. So we have the 100% real estate financing, right? What you have to remember is that's 80% and 20%. The 80% is going to come from the primary lender, and the 20% is going to come from other sources. And that could be owner's contribution, or we can use working capital through the ICS program to fund that. So what happens is if you have someone coming to you, Tubby, and says, okay, I need $335,000 to buy a home. I want to use the 100% financing program. Great. You're going to enroll them in the Capital Ready program. Then what we're going to do is say, okay, we've got 80% in the bag. Not a problem. Now on the other 20%, Tubby, does your client have 20% of that? Does a client have $70,000 approximately? No. They want to do 100% financing. Not a problem. So then we need to go raise about $70,000 to cover that 20% because the 80% is in the bag. And so we can use working capital. There's a variety of different sources of capital that we can use, but we're going to have to raise the 20%. Once the 20% is in your business bank account, then we know it's time to apply for financing for the other 80. So the 20% will be raised through other sources, through ICS, or just the owner brings it to the table. Once we have the 20% liquid in the business bank account, then we turn around and apply for the other 80, and then we go buy the property, and then you, as the branch manager, is making a predicted $17,999 off that one transaction. Now we have some of you bringing us much bigger deals that are, we have one deal that we're working on that's $5 million for property. So with a $5 million deal, you're still only making $499 up front. That's not changed, and the refundable deposit hasn't changed. But my goodness, your performance fee is $250,000. So, real estate deals can add up very quickly. The same rule applies though, right? We're still going to be doing 100% financing, 80-20 on real estate deals. 80% will come from the primary lender. We're going to have to facilitate the other 20%. So we're going to work with the client to raise 20%, $5 million, which would be $1 million. Once that $1 million is parked in their business bank account, then we can go apply for the other 80%, which would be the $4 million. But those aren't the norms. The norm is going to be a $100,000 capital raise, and let's assume that we're going to do 20 of those a month. Then this is how the numbers would shake out. Okay, so let's get over to your questions now, because I've talked way too long. For that, I apologize, but hopefully we've addressed a few of the questions that you had. So let's see. we addressed Tubby's questions. And again, we're going to focus on questions related to the branch managers, right? Let's see. Jake says, I've got 2 clients in the Capital Ready program. They only want an SBA loan. They don't want any interim financing before that. Can they do that? Yeah. So we don't have to go straight. So there's different funding sources. So we'll go back over here, Jake, and we'll say that we want to go straight for an SBA loan. And of course, there's different types of SBA loans, but one of our favorite is the 7A Express. And that has some nice attributes. Startups qualify. We only need a 165 FICO, minimum collateral requirements, 10-year repayment term, low interest, for example. So, Jake, yeah, so if you have clients, you would enroll them in the Capital Ready program. You would collect the $499, you'd send us our half, you'd follow these 4 steps here. And then when you onboard them here, you would make it clear that all they want is an SBA loan, that they don't want any interim financing. Now, what you have to keep in mind, Jake, and you know this because of your lending experience, but not everyone on the webinar may. Well, and I didn't put the SBA 7A Express goes up to 150,000, right? There's other types of SBA loans for bigger amounts, but this is kind of a working capital loan that's real popular. So if we go apply for an SBA loan, and even, we meet these criteria, which isn't too difficult. We'll make that up to. So not too difficult to meet. And one of the things they're going to do is say, well, great, how much money do you have in your business bank account? Not how long has your bank account been open, because there's no minimum time because startups qualify. But, we need to show some liquidity. And that's where often, Jake, will need to do interim financing to create some liquidity, because an SBA loan for someone that has, $500 in their business bank account is pretty darn risky, isn't it? That if they hit one bump in the road, they don't have enough money to pay any bills at all. So often we'll do interim financing to create some liquidity. All right, so hopefully that answered that. Refundable deposit, that is refunded back once the client, what's over here, reaches at least $100,000 capital raise. Let's see. Sterling asks, what are the specific volume breakpoints on the $499 on onboarding packets? You're right. You can buy those packets in advance, and we discount those down lower and lower, but almost everyone's just paying as you go. So I would just say, let's just plan on that. It's just an even split. But as Sterling knows, if you want to buy some of those packets in advance, then we can give you a bigger discount. I think Barry was one of the first one of those. He bought 100 packets at $100 a piece. So he makes $400 profit up front. He paid $10,000 for 100 onboarding packets. But we're not pushing that. That's up to you. But that's why Barry makes more money than some of you. All right, let's see. Sure, I'm answering these questions. And Barry brings up a good point on the real estate. Since we're going to need to be able to finance the performance fee, we would end up borrowing more than just the cost of the purchase. Tubby's purchase was $335,000. If all we got him was $335,000, there wouldn't be anything left over to pay the performance fee. So we would need to raise 10% above that. And so that's an astute point. All right, well, we ran a bit long. I think we covered a lot of information. Hopefully this was helpful. So this is economic modeling for branch managers. Yesterday we did economic modeling for business financial literacy advisors. And then tomorrow we'll do the last economic modeling scenario for others. And then we'll be able to package everything up and get everyone a full training kit, pulling from these training sessions that we've been having in lieu of the in-person training that we've not been able to hold. So hopefully this was helpful. Thank you for your time. The key is to go produce, man. If we don't generate any volume, there's no money to be made. And even before your branch is fully funded, you can start generating income, helping clients, and making a difference. Thanks, everyone. Have a great day.